All right, this is reason number one, the last video in this series. So welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns. Randy Patrick here putting the realism back in real estate. And as I mentioned, this is the last video in our top 10 reasons why we'll have another housing crash and crisis. To recap, what we've seen so far is reason number 10, banks, lenders, and servicers preparing for the worst. Number 9, the Mortgage Debt Relief Act is back in a different format, but still there. Number 8, both domestic and foreign investors have left the market, leaving the market. Number 7, the current housing narrative is pushing us down a different path, and different levels of government want to get more and more involved in real estate. Number 6, home price appreciation is skyrocketing. Number 5, delinquencies, forbearance, and foreclosures are happening, and they're increasing in volume. Number 4, the data providers discussing foreclosure volume, what's going to happen in the future. Number 3, Wall Street is waiting for this to happen with all the dry powder and their billions and billions of dollars to buy distressed properties. Number 2, we've heard major warnings from the CFPB and the Florida Supreme Court as to what to expect and what they're telling their people, their groups, how to prepare and what's going to happen in the future. So that's the cool thing here. This is the last video in the series. So at the end, I'm going to tell you how you can download a report, sort of summarizes the top 10 reasons why we'll have another housing crash and crisis. I'll have that at the end of the video here. So reason number 1, but you know what? A little trick here. I've actually got 2 number 1 reasons because I just thought they were so important, and also because top 11 doesn't sort of make sense. You want to keep it with top 10, right? So reason 1B, rental rates are increasing. And why are they increasing? Well, because they are, and people want them to increase, and people want to earn more money, etc. So what we've got going on now is we've got much more rental risk for landlords. And when I'm talking rental rates, I'm really focusing on single family rental rates, like 1 to 4 units, single family home, duplex, triplex, quad, whatever. That's what I'm looking at right now. So what's happened? Well, obviously, as I've said many times, the small landlord, the mom and pop landlord is getting beaten up, getting hurt with respect to people not paying rent, etc. All this rental assistance that's been earmarked for landlords and tenants is just slow to roll out. It's difficult to access. You need tenant participation. And I'm working with some clients who are going through this process right now, and it's not easy, it's not timely, and it really doesn't benefit them, in the end. There's no method to, I guess you could say, recoup lost rent if the tenant has already vacated or was evicted. So the tenant could not have paid you for 12 months and they left, or you finally had to evict them, and you're not getting any of that money back, because a lot of this stuff, at least where we are, where I am and right now in the programs that they're offering, which is only one program that I'm aware of, you got to be a tenant has to be in the property. They have to participate in this application process to get you some money if you're a landlord. So that's one of the big reasons here. So as a result, what do we see here? Well, landlords are tightening their standards, which means the application process and criteria is going to be tightened. So what does that mean? Well, that could mean higher credit scores, better employment for people, more due diligence on a landlord's behalf. They're not going to allow certain things, certain situations, certain history, whatever. But in the end, rental rates are increasing. All right. So as a result of this, landlords are going, well, I need to raise rents. Either I have to recover what I've lost, and I need to protect myself, or by the thought of, if I'm raising my rental rates, am I getting a better, more qualified, better employed potential candidate to rent my place up here. Also, I've noticed that some are keeping their units vacant. So right now, while the eviction moratorium is still going on, and it's sort of dicey in different locations, some landlords are saying, hey, if people have left and I got a vacant unit, I'm not going to release it or re-rent it until we get some solidification on what's going on here, because there's no point in just leasing to somebody else for them to not pay as well. And basically, they don't want or don't need future issues. So why take a couple months worth of rent to have yet another year or another how many months of non-payment? Doesn't make sense for people, right? So it's all these things. And what we see here is that migration, to the single-family rental from multis happening, urban to suburban's happening. Why? Well, can't afford to purchase. So if you can't afford to purchase a home, therefore you need to rent or remain renting. And that's the thing. So the opportunities there with all the people who are becoming renters or want to rent from out of the multi, clearly landlords are going to hedge their bets and try to protect themselves, and they're going to raise rental rates. So Normally in housing bubbles, what we see is house price appreciation grows first, and then rental rates are slower to actually sort of catch up. Well, so what we've seen over the past little while is rental rates are increasing at a much faster pace, and they are catching up. So that divergence is closing. So as I mentioned, this really is talking about the single family rental market. So when their rents are up, it's big time here. So going to risk. So this is a report that was put out by Realty Track, and basically saying that almost half of U.S. counties are above average risk for increased rental property defaults. So the pandemic and the government's response to it have created a unique situation which may put thousands of rental property owners at risk of bankruptcy, foreclosure, or the need to sell off properties at distressed prices. This is what I always talk about here. That this segment of this 19 million plus single family 1-4 unit volume of rental properties, it's at risk because of the situation we see here. This in turn can have negative implications for tenants, neighborhoods, and communities where rental properties are located, which means either less rental available, and same thing like home price appreciation. So if there's less rental or there's more desire to rent, lenders are going to go, I can raise prices, etc. So what's happening in house price appreciation and buying and selling is happening now on the rental side right before our eyes. So it's a double whammy for looking for accommodation. And just so you're aware, 6 states account for more than a quarter of the highest risk large counties. So basically you got Florida, New York, California, Ohio, Texas, Illinois basically accounted for more than 27% of the high risk locations for rental. And when you take a look at it, and again, I'm not going to bore you with all the details, but here's your top locations. Mojave County in Arizona, New York County in New York, Kern County, California, Horry County, South Carolina, Collier County in Florida, which is Naples area, Polk County in Florida, which is just west of the Orlando area. Lakeland is sort of the major city there. So you can see these are the top 5 locations where you've got a large percent of single family rental accommodation. You match that with loan to value rates on mortgages, unemployment rate. They got a risk score. So this is the issue we're looking at here. And of course, I won't go through every list, but they've done this for the top 100 locations or 50 locations. So you can see that they're primarily, there's, as I said, over 25% are in a handful of states, which sort of works with the housing crisis. Now prices are really soaring. May rent jump is the biggest on record, according to this article. When we take a look at going back in time a little bit, this is some information from April. So America Home for Rent, which owns 54,000 homes, increased rents on vacant properties in April. So they see what's happening. So anything that's being turned over, they go, you know what? We're going to increase the rent. Typical rent increases is usually 3 to 4% a year on average. So they're basically almost tripling that, going, we can, because the market allows us to do so. What they're also doing is that's on vacant property. So yeah, because they're not holding over, with like a new lease or going month to month. They're also saying here that they're achieving 11% rental rate growth on new leases. So if you finish your lease and you want to basically continue to lease, that they're increasing that as well too, which is out of control. Invitation Homes, the largest landlord in the industry, boasted rents by a similar amount. Basically, rental occupancy rates are emboldening single-family landlords to hike rent aggressively, testing limits of booming demand for suburban rental. So that's what's actually happening right now. So home price appreciation has hit the purchase side. It's now hit the rental side. So it's coming at both ends now, and this really does not bode well. So there has to be some sort of change correction to move things down the other way to make it more affordable for more people, you see. So I've been talking just single family. This actually comes from Apartment List, and you can see that a lot of these major locations that had dips in, I guess you could say, rental rates, they actually were reducing their rates and they were dropping, have now seen a resurgence. So it's one of those things where that was kind of like a little bit of a blip, and now because people still need to live, you're going to see that some of these people are now going back to sort of the urban centers, etc. So there's a whole shift going on here. But point is, this is on the apartment side. We're going to start to see a rebound on that as well too. So rents are going up, because single family, and rents will eventually catch back up on the apartment side as well too. So that's what's happening right there. But first of all, if you're not already a subscriber to my channel, if you could smash that subscribe button, help my channel grow, I'd really appreciate that. Secondly, if you are a subscriber, could you please check and verify your subscription and hit the button again? Reason being, because I've seen a lot of subscribers counts decreasing. I'm kind of plateauing again. So if you could do that check it out for me. It'd be a great favor. Help me out. I'd really appreciate that. So thank you very much. Okay, my next reason is reason 1A. So this is the actual end reason here. Is buyers are speculators, all right? Buyers are speculators. And we're going to talk about this because this really, it's one of those things where I disagree with this completely. So this is part of the current housing narrative. So we've got, many facets of the housing narrative, which I'm not a fan of. So what people are saying, journalists, and typically they're journalists. I don't really call them real estate analysts or economists because typically they use facts to back things up and numbers, statistics, whatever. So a lot of the writing you see out there on various websites and various news channels that sort of are focused on housing basically is saying, why did the previous housing crash occur? Well, it occurred for 3 reasons. We had poor lending standards back in the day. We had lack of owner-occupant buyers, if you can believe that, and we had rampant speculation. So this is what they're saying why we had a housing crash that happened back over a decade ago. Well, if you take a look at the poor lending standards, yeah, there was some poor lending standards. We had subprime mortgage meltdown. The subprime, started the housing crash and it was sort of blamed for the entire process. If you do some research and see what's going on out there, subprime only accounted for about 20% of all the loans that went into foreclosure. The main issue were conventional loans and cash out refis. So equity stripping, that's what caused the problem, and that's how the housing market kind of collapsed with that and a few other reasons. But the whole point is it wasn't poor lending standards because, doing HELOCs, if you got the equity, we'll take it all out. You can't pay it, things change, there you go. Now, with respect to where we are today, standards are lower. So once the previous housing crisis occurred, standards became very, very tight. And it was tough for very qualified people to get mortgages. But as time has gone on, like anything, if they're not selling homes, if you're not loan originating, then money's not moving. So some of that stuff has been relaxed over a number of years now. Different lenders, non-banks, more, we'll call it, stated income loans, different type of loans, investor loans, the whole bit. So standards are being lowered. Just look at FHA. I look at FHA as today's subprime. So really, I'm kind of saying that, if you look at FHA being, low down payment, high debt to income ratio, and lower credit scores, well, doesn't that kind of fall into what a subprime mortgage typically is? So really, I'm saying that this is a debunked reason. No, it's not the main reason. It's one of the 3 that they're saying. That's debunked, all right? Now, if we take a look at the second part of this, which really is, I guess you could say, I don't know how we could put it. And this is where I don't really understand why people would say this at all. It's what we call that we had in the first housing crisis, a lack of owner-occupant buyers. So I don't really understand this because the assumption is if we had a lack of owner-occupant buyers, well, was every buyer back in 2005 and 6, 4, 5, and 6, were they all investors? So did 8 to 10 million investors buy property? And why I say that, because we had about 8 to 10 million foreclosures, that sort of resulted of all that. So were all these 8 to 10 million foreclosures investor-owned? I really find that hard to believe. The majority of homeowners that lost homes to foreclosure and short sales were owner-occupants, okay? Because they did things. Yeah, there was the subprime and there was equity stripping and a few other things too. I'm not saying that there wasn't investors involved here, but the point is to say that the majority were investors is just simply incorrect, all right? Now, look at it today. Are all of today's buyers owner-occupants? They tend to. That's sort of the impression they're giving us, is saying that they're saying today's buyers are owner occupants. Well, guess what? There's a lot more investors out there this time round. All right, and investors are competing with retail buyers because of the lack of inventory. So I look at it going, not everybody that's doing this right now is an owner occupant. So I'm kind of saying this is another debunked reason as well too. So, but not the main one. And here's the main one, what I want to focus on here. So they basically say that, again, journalists making the reasons, rampant speculation. So there's no speculation in today's market. That's what they're saying. Because you're an owner occupant and you're buying to live in it, there's no speculation. Well, I sort of thought about this and I said, well, and I did a video on this a little while ago, but this to me is the main reason here. So, and this is what happens at top of the market, peak of the market, highest values, and housing, or not even housing, just bubble theory mentality, regardless of what the product is or the industry is, etc. We're in a bubble situation right now, okay? What about bidding wars, all right? We hear the bidding wars are going all the time. What about buyers buying sight unseen, All right. What about the pressure and games from real estate agents? Okay, the pressure is saying if you don't buy it today, it's going to go up next week, or you're going to lose out. You got to write that contract now. The games. What I mean, the games is the fact that real estate listing agents are basically doing highest and best immediately, having open houses, basically saying we want no contingencies, we want cash. Like they want the best contract, which is for the seller, which is not maybe not the best contract structure in terms of conditions for the buyer. It's that fear of missing out, FOMO. Okay, so that's what's going on right now. So it's all being perpetuated, and everyone's complicit in all this. Now, but my point to you is, if you're willing to compete and bid against other buyers and pay well over list price, are you not speculating on future value? So if the list price is $500,000 and you're buying it for $600,000 or $625,000, and you've paid 20% more for a property, because that's what we're hearing when you start looking at the news and looking at the blogs and stuff like that, you're seeing ridiculous prices. So list price is X, sold, they're getting hundreds of people at open houses are getting tens, 50, 100 offers, crazy numbers, and the actual people who are winning the bids are paying so far over the list price. Is that not speculation? Because what are you doing? You're speculating that if my list price is $500, because, and remember, if the house price was set at $500, then a real estate agent, if they're doing their due diligence, should say, comparable wise for the past couple of months, this is where price point is of solds is happening in the market. This is why our list price, we can bump it up a little bit. So if things are being grossly overvalued or overbid, is this not speculation? I guess that's my point. Like, in other words, is a buyer not speculating on where the future value of the property is going to go down the road? Like, how's that going to work? So this is not speculation. How is this any different? So, back to the thought process is that buyers are speculating. Buyers are rolling the dice. Now, they're not necessarily flipping the property or going to buy and sell in a couple of years. It's the place they want to live, but doesn't that have other ramifications? You're speculating that at some point in time, housing values are actually going to catch up to what you purchased it for. Okay, you have a loan to value situation with respect to your mortgage. You have an appraisal that is part of your mortgage process as well too, right? You're going to have taxes, so your tax base is going to be based on your purchase price and things like that. So there's so much that goes on in this that if you're overbidding, you're also pushing yourself higher in other cost elements of owning and managing a home. So clearly speculation is happening because that's what's going on in the marketplace. There are bidding, there are prices are going up quickly. People are outbidding each other, etc. So I guess my point is, how is this any different? So for me, it's not different. So there is speculation. So that's kind of my main point. And I look at Redfin here. Redfin just says, this is recent. It bases almost 3/4 of home offers written by Redfin agents faced bidding wars in April. So you look at that, it says nearly 3/4, so 72% of home offers written by Redfin agents in April faced competition, according to a new report. That's up from a revised rate of 66.7% in March and almost 45% April a year ago. All right. So basically, this is what's happening. So this is what Redfin is basically saying. So, Redfin, it has some data, some pretty good data. So that's an example that's happening in the marketplace. So if 72% of all homes that sold are going for bidding wars, what does that tell you? It tells you it's not a few handful of people that are going, well, I'm going to speculate and I'm going to do this. It tells you that the majority, okay, that's more than 2/3, almost 3/4. That's the majority of what they're seeing is, to me, speculative buying at this point in time. So, as a record, 58% of all houses sell within 2 weeks of listing, of which 45% sell more than their listing price, also a record. All right, so think about that. So almost 50%, so you got 45%, we're all approaching 50% are selling more for their listing price. And, so that's, we're almost talking half the market here. So to me, when you got that many, 72% of people who are engaged in bidding wars, and then 45% are selling, for more than list price, to me, it's not 10% or 12% or 15%. We're talking large percentage numbers are showing what's happening in the marketplace here. Folks, this is speculation. You can't get around this. I don't know how you can say it's not speculation. So really, this is debunked, okay? What's the definition of debunk? Expose the falseness or hollowness of a myth, idea, or belief. So there you go. So I look at it going, that's what's happening. Buyers are speculators right now. So according to all the journalists who are really quick to tell us we're not going to have any future housing issues because we don't have these elements of what happened in the last housing crisis, I've debunked that. And basically, we do have interest rate mortgages with lower standards going on now. We do have, I guess you could say, whatever my reasons are based. I actually forgot the second one. Can you believe that? But the whole point is, I'm really focused on the speculation here. Okay, so owner occupants, their investors are competing now, so it doesn't really matter what's going on in the marketplace. And a lot of people look at homes as investing anyway, so it's kind of a quasi thing here. And guess what? Speculation, bidding wars create speculation. That's the result. Simple as that, guys. So it has been debunked. So I think therefore, I rest my case with respect to the top 10 reasons why we're going to have a housing crash or crisis. These are the top 10 reasons. There are other reasons that impact the whole marketplace as well too. And as I mentioned, it's not just one reason that's going to push everything over the edge or cause some problems in the future. And the big question is, how's it all going to play out? Well, that's another future video discussion, but we're starting to see signs of that right now, which is really kind of cool. So the whole point though is, collectively they are impactful. Singularly on their own, if it just was one reason, wouldn't be that big a deal. But when I can show you 10 good reasons, there's probably 5 or 6 more smaller things I could point to that would contribute to everything collectively. Cumulatively, it's a whole different ballgame out there. So that's what I'm looking at here, guys. So when I say it's time now to react. Okay, the end of forbearance is approaching. We're going to start seeing some stuff flush out after the end of June here. Foreclosure auctions are back on track in many locations. Foreclosure filings are coming back too. They're starting to increase. This is where you have to look for deals. More will be available than predicted. We're not seeing the true numbers. Investors are already out there pursuing these, so you got to take take things into control yourself and get a jump on this. All right. How many are distressed? Well, again, I've showed this slide so many times. We're going from a range of 2.2 million, which is just the forbearance number chatter discussed by Black Knight, all the way up to apparently 10 or 11 million. Okay, everything in between. So I look at it going, we're probably going to be 2/3 of that. 6 to 7 million would be a conservative guess. There could be more, but I hear a lot of people behind the scenes going, there's more stuff and we're not prepared for it. And there's still, again, some of these small landlord wild card amounts, whatever, like stuff we just don't see, don't get certain information on a certain segment. So that's, I really believe we're going to have more than it's talked about and more than we really expect here. So now you want to download the deal here. To download the top 10 reasons why we'll have another housing crash and crisis, go to housingbubble2.com. It's a landing page. Click, get the report, put in your email. You can download it right then and there. Okay. So really, it's my summary of the top 10 reasons that we'll have a housing crash and crisis. So again, when I talk about distressed properties, take a look at the most recent information we have here from my neck of the woods in the Tampa, St. Petersburg, Clearwater MSA. Median price point for traditional single-family home was $300,000. Short sale came at $190K, $110K in equity difference, 37% discount over retail. This is the reason why you want to get involved in distressed housings. You can see the REO is about $220,000. The short sale is even better. Very few are being done right now because of the current situation. This will increase when more foreclosures happen and stuff like that. So it's going to happen. My suggestion is getting involved now to get prepared for this. Florida, other places across the country, but Florida is going to be a big, location for a lot of this type of real estate purchasing and investing. So whether you want a primary or investment, this is the way to go. I can show you how to do it. All right. That's why I say Florida is the place to buy and invest. We are a growing state. We got lots on the go here. Again, we still are, relatively speaking, fairly inexpensive compared to many parts of the country. So a lot of people are figuring this out. They're wanting to come down to Florida. All right, guys. So again, the whole point here is that things will happen. Hopefully you've appreciated my reasons. If you want more information, I've got a couple of programs that you can jump in. My flagship short sale program, which is the Mac Daddy of short sales, and there's so many layers to it, I can't even explain it. So contact me. We'll discuss it. Also, if that's too intense for you, we got Zombie Foreclosure Flip, which basically is a watered down version of all distressed properties and how you can find them and what you can do with them, how you can make money, etc. So that's the opportunities here. I'll tell you how to engage the distressed housing market. Just connect with me. That's the email. Send me your email with your phone number, and that's how we'll schedule a call to connect. All right, guys. And once again, if you're looking to see what type of volume is going on right there, go to gethousingdata.com. Gethousingdata.com, that's the website. It's my partnership with Foreclosure.com, basically the #1 provider of distressed property listings across the U.S. You can go anywhere in the country to see what's going on with respect to pre-foreclosures, tax deed sales, foreclosure auctions, other things that are going on, probates, stuff in the marketplace, etc., to give you a really a litmus and a sort of a feeling as to what the distress level is in your area. So please check that out if you want some more information. Other than that, once again, guys, I appreciate you indulging me on these top 10 reasons. Reach out to me if you want more information. Appreciate the views, likes, comments. Share the video with your family and friends. If you're not a subscriber, please smash that subscribe button. I really appreciate that. And I look forward to speaking with you in a couple of days.